Bitcoin is moving fast and could be closing in on its previous all-time high of almost $20,000. So should you buy it now? Should you wait for a pullback? Or should you just ignore it as a fad, a trend that just won't seem to go away? Well, in this video, I'm going to answer these questions. And even if you fall into the camp of thinking it's just a fad that won't go away, you're still going to want to watch this. So stay tuned. Hey everyone, Mark here. So Bitcoin is making big moves. While the rest of the markets, the stock markets, gold, they're down, Bitcoin is making move. And it's got many of the, what I call Bitcoin believers, it's got us excited. But now those that want to buy it or wish they had, bought more, they're asking me, should I buy now or should I wait for the pullback? So let's dig into this question and find out. Now, Bitcoin has been the best performing asset of 2020. It's now up year to date 83% since January 1st, and since the low of about 47.45, which is in March when the pandemic broke out, when the market crashed, it's now up about 180% since that low. Now, despite its performance, many still doubt it because, you've heard all the things, right? You can't hold it in your hand. There's too many cryptos. It uses too much energy. The government's going to ban it, and on and on and on. But with the price pushing back to its all-time highs, you just can't ignore it anymore. And many people, they're tempted to buy it for the very first time, or like I said, buy more. They're wishing they had put more money in when the price moves up. But the question that's on everybody's mind, the question that I'm getting blown up with is, should I buy it now or should I wait for the pullback? And the answer is one that you might not like. Are you ready? It depends. Now, you knew I was going to say that, right? You knew I was going to say it depends. And it depends on many things. So let me tell you what we have to think about. So the first thing that we always have to know is why. Why am I buying it? So for example, do you want to buy it to speculate that it goes back up to its all-time high of 20,000 and then sell it? Or do you think that it can go to 50,000? Do you think it's, the future like I do? So you have to understand what's your purpose, what's your level of confidence. So let me give you the answers regarding of where you fall into the camp. So first, let's start with the skeptic. I want to start with the skeptic first because you may not make it to the end where I'm going to show you some charts and give you some ways to actually think through this with numbers. So let's start with the skeptic. So let's say that you're getting more interested. It doesn't die. It's not going away, but you're still skeptical, right? So I would give you this quote by the Bitcoin creator Satoshi Nakamoto, and it might make sense just to get some in case it catches on. So one of the most successful hedge fund investors of our time, Paul Tudor Jones, he thinks along the same lines of Satoshi Nakamoto, and he took his hedge fund and put 1% of the fund's portfolio into Bitcoin. All right. Now he's come out publicly and said he sure wished he would have put a whole lot more in, but he put 1%. And so look, the thing is, if you lose 1% of your net worth, it's not really going to make much of a difference if you lose the 1%. But if you put 1% and it goes up 10x, then that's a big deal, right? You're going to notice that. So this is what we call an asymmetric bet, an asymmetric upside, which means that you have, a small, tiny risk, but you have a huge upside. You have a 1x down, a 10x up. Those are the type of odds that we like. Now let's say that you have a little bit more conviction. So you want to go a little bit heavier, like Paul Tudor Jones wishes he did. So now you want to do 2% or 5% or 10%, all right? Whatever your level of conviction is. Now, there's some well-known analysts that have kind of put out some different numbers. One of them, Anthony Pompliano, he claims to have at least 50% of his net worth in Bitcoin. MicroStrategy, which is a billion-dollar software company, has put 100% of their treasury into Bitcoin. So that's about $500 million. Now, for me personally, you probably want to know, and I would say I am what Raoul Pal calls irrationally long. Now, that's mostly because I started buying Bitcoin super early when it was just a couple $100, and it's really, really grown. And so it's a much bigger percentage of my portfolio than I would typically want or suggest, but I'm not selling. And so that's why I have that irrationally long percentage. So now you know how much as a percentage you should buy. The big question today is, should I buy now or wait? And the answer lies in your conviction of its long-term potential. So let's talk about that. Where can it go? So the answer to this is we want to see where it could eventually go. And sure, you can take my opinion, but again, I know you love watching me on YouTube, but who am I, right? So let's look at what JP Morgan Chase, which is arguably the most influential bank in the United States, probably in the world, and let's see what they say as far as where Bitcoin could go. Now, you've probably heard plenty of comparisons between Bitcoin and it being compared to digital gold, but I believe it's so much more. And of course, I am a gold bug. I talk about gold all the time, and I know many of you watching this channel are also gold bugs. But the reality is, Bitcoin is really an alternative to holding fiat currencies, just like gold is, right? And so as the central banks print an unlimited amount of fake fiat currency, it's going to continue to push the narrative, push the reason why we need to be moving more of our money into these alternative places like gold and like Bitcoin. Now, the older generation believes in gold, right? They want something tangible. They want to hold it in their hand. I mean, I see the comments all the time, thousands of comments a week. And, they say, if I can't hold it, it's not real. And I certainly get that point, all right? But we live in a digital age, and already 90% of all dollar-based transactions are already digital. For me personally, I pretty much never deal with cash. And not just my cash, I mean my music, my books, my documents, they're all digital. And it certainly doesn't mean that they're not real, right? But it's that line of thinking that creates such an enormous opportunity for us, because as investors, like I said, we're looking for asymmetric opportunities, and to get those, we need asymmetric information. And so because so many people are still not knowing about it or blind to it, it gives us that opportunity, that asymmetric information. So the older boomer generation of investors, they want gold. All right. And the younger generation, including millennials and Gen Zers, would rather purchase cryptocurrencies like Bitcoin. And we can see this point when we look at the Charles Schwab allocations of their millennial clients. And it shows the Grayscale Bitcoin Trust, and it shows that it's their 5th largest holding in millennials' retirement accounts, including their 401k. So that means the millennials' retirement accounts have about 2% of their assets already tied into Bitcoin. And now that Bitcoin's back on the move towards new highs, like I said, passing its previous all-time high of 2019, following this week's endorsement by PayPal, which said they can bring on about 350 million users, which is a massive bump. And then, of course, it led to more support from corporations that we saw Square, we saw MicroStrategy coming out and endorsing it. But enough of that. Let's go back to JP Morgan, arguably the most influential bank maybe in the country and the world. So I can't imagine anyone in the Bitcoin space was expecting to get an endorsement from them. But they just put out an article in the Flows and Liquidity Reports forecasting Bitcoin's price to 10x from here. Now, they said all this is, quote, another big step towards corporate support for Bitcoin, which in our opinion would facilitate and enhance over time millennials' usage of Bitcoin as an alternative currency. Now, to hear JP Morgan say these seems pretty crazy to me. And if you've been in Bitcoin since at least 2017, you probably know why. If you can remember back to September of 2017, when Bitcoin was about $4,000, it was about $4,200, and it was only 90 days away from its previous all-time high of $20,000. The CEO of JP Morgan, Jamie Dimon, he went on a public rampage all over the media calling Bitcoin a fraud. He said it would blow up. He said it would not end well. He said it was worse than the tulips. He said, even went so far as to say, quote, I'd fire a trader in a second for trading Bitcoin. So those are pretty strong words. Now, of course, he said that at 4,000. Today, Bitcoin's at 13,000. And so to see JP Morgan, about face, to put out a paper like this, it's a massive change of opinion, and it shouldn't be taken lightly. Now, if you understand JPM's role in the Federal Reserve and central banking, like I said, arguably the most influential bank in the country and the world, then you understand that to hear that from them, it's pretty big. 2 years ago, they said they would fire anyone, to now they put out papers that they see it going up 10x, right? So it just goes to show how far we've gone. And it makes me think of the quote from Gandhi. And they said, first, they ignore you. Then they laugh at you. Then they fight you, and then you win. So how have they gone from, the CEO wanting to fire anyone involved in buying it and selling it to now saying that it's poised to go 10x from here? Well, it's because of the differences between the older and the younger generations, or rather the younger generation's preference for digital assets and alternative currencies. And straight from JPM, they said, quote, the older cohorts prefer gold, while the younger cohorts prefer Bitcoin as an alternative currency. Both gold and Bitcoin's ETFs have been experiencing strong inflows this year, as both cohorts see the case for an alternative currency. And we can see with the Grayscale Bitcoin Trust that it's really helping us to see this difference between gold and Bitcoin. We can compare them side to side, and it's easy to see that the new inflows to Bitcoin are actually exceeding those that are going into gold. Now, there is one point that I need to mention that they brought up in the report. I think it was a key piece, and that is, since we have a huge increase of millennial buying, just like we've seen them, rush into the stock market through Robinhood and whatnot, it's that now both Bitcoin and gold appear to be more closely correlated to the stock market and more of like a risk-on asset. Because of this, in other words, according to JPM, both Bitcoin and gold could be increasingly characterized as a risk asset rather than a safe asset. Because remember, I started saying you have to know why you bought it. And so we have this younger generation buying it like more of a speculation, buying it just the same way they're buying gold and stocks. And so because they're buying it for the same reasons, they'll most likely dump it for the same reason. So basically this just means that it could be a little bit more volatile, a little bit more correlated with the stock market, at least for now. But While seeing Bitcoin more correlated with the stock market seems bad for now, what this also means is that when it comes to millennials, there's an entirely untapped market. And from this perspective of utility, and as the JPM strategist predicts, Bitcoin could compete more intensely with gold as an alternative currency over the coming years, given that millennials will become, over time, a more important component of investors' universe. So, how far does JPM forecast that Bitcoin would go? Well, currently, the total market capitalization for Bitcoin is about $240 billion, and JPM doesn't think it's fair to measure Bitcoin just against gold, right? They don't think it's right to measure it against gold that's held in gold ETFs, paper gold, because that's not how people really store their wealth in gold. So instead, wealth is mostly stored via gold bars, gold coins, things like that. And so if we calculate this without counting, what's held by the central banks and all that, then we have basically what's the private store value of gold. And that's about 42,000 tons, about $2.6 trillion. So this means that the market cap of Bitcoin would have to rise 10 times from here to match the total, just the private sector investment to gold bars and coins. So not the total, 10, 11 trillion gold market, but just the 2.6 that's privately held in gold. All right. And so that would push the price of Bitcoin to over 130,000, which I said is about a 10x. Now, even a modest, crowding out of gold as an alternative currency over the long term would, according to JP Morgan, imply, quote, doubling or tripling of the Bitcoin price from here. So in other words, the potential long-term upside for Bitcoin is considerable as it competes more intensely with gold as an alternative currency. Now, we believe, given that millennials will become over time a more important component of investor universe, so to answer the final question, should you buy now or should you wait? Well, and sorry I took so long to get here, but you have to understand where it's going, right? You have to understand where it's going so you can answer this question for yourself. If you believe JPM could be right and Bitcoin could go to 130,000, then whether you buy Bitcoin today at 13,000 or 14,000 or it dips back to 10,000, it doesn't really matter if it goes back up to 100,000, right? Or even if it goes to 50,000, it still doesn't really matter. But if you fall into the camp that, you're afraid to buy now because it could pull back to, 9 or 10, or even some guy on Twitter said it can go to 8, then for you, I'm going to advise a totally different approach, and it's called DCA, or it's called dollar cost averaging, DCA. Now, what this means is instead of dumping in your whole purchase today at whatever price it is, which would also be known as lump sum purchases. Instead, you break this amount up and you break it up into monthly, bi-weekly, or even weekly payments. So let me show you how this works. So you can see on the screen right here. So let's say that I started right before the peak of 2017. So I started buying in October of 2017. I was, the price was going up. I was FOMOing in, and I was just buying at the top of the market from October, November, December, and I was just buying $250 per week. And then the market crashed, and then it dropped from 20,000 and 18 and 16 and all the way back down. And I just kept buying $250 per week. I would have done that since then. I would have turned $29,250 into $60,000. That's a 50% gain. All right. Now let's say that you started after the market crash. You were a little bit better. You started 2 years ago at October of 2018, and you were doing the same amounts, $250 per week. Now you would have turned $26,000 into $41,000, or a gain of almost 60%. So what does this tell us? Whether you FOMO'd at the top of 2017 and bought October, November, December, and bought all the way back down, all the dips, or you started in 2018 more in the bear market. Either way, with weekly buying, you're now up over 50%, right? So now that you know that, what should you do? Should you lump sum buy today? Potentially, watch it drop in the near future? And would that make you nervous? Or buy some today, and then if it goes down, you buy some more. If it goes up, you buy some more. Well, the answer, of course, depends. It depends on your level of confidence. So if you see a 50 to 100,000 price in the future like JPM, then buying today doesn't really matter. You can probably just set it, forget it, and be done with it. But if you're nervous about the price, you're nervous of it dropping down, then the DCA approach is for you. Now, leave me a comment down below and let me know which you prefer. Would you rather take the more safer route and DCA into it, even though you might be buying it higher, or would you rather just lump sum, dump it in, forget it? All right, leave me a comment and let me know which you prefer, lump sum or DCA. Of course, give me a thumbs up on this video if you like it. If you don't like the video, that's okay. Give me a thumbs down, but leave me a comment and tell me why. Try to answer as many comments as I possibly can. All right, that's what I got for you today. To your success, I'm out.